So there is an analyst that believes that Tesla stock is ready to fall down an additional 80% more from its current levels to around $24 a share.
You're insane.
Now in this video, I want to go ahead and break down my thoughts on that and also talk about what I'm looking into going forward. Now, of course, if we look into Tesla stock, it's very easy to tell that Tesla stock has been getting slaughtered. Now, a bunch of traders that only focus on technical analysis believe that Tesla stock was going to bounce up from the $200 price level. However, when you look into the Tesla stock price action, that did not end up happening. Now, in the Push and Profit private group, I stated a copious amounts of times that you should never just make your trades based solely on technical analysis, as that's only one data point. And when you're only looking at one data point, of course you could get things wrong. And I mentioned that based on the economic climate taking place, it's very likely that we're going to see Tesla break below the $200 price level. And of course, that's what Tesla ended up doing. And while a lot of traders thought that a Christmas Santa rally was coming, it looks like the opposite quite happened.
I told you, Santa is not real.
Now, along with the economic climate, it also doesn't help that Elon Musk has been tweeting a lot lately. So much that a lot of investors have concerns that Elon Musk is just not putting his priority on Tesla stock, which is definitely a major concern. However, Elon Musk made a poll on Twitter stating that if he gets enough votes, he will leave from being the CEO of Twitter, which of course got a lot of votes because people don't want Elon Musk to be on Twitter as much as he is. And it looks like Elon Musk is going to be looking for a replacement for the CEO of Twitter. And it looks like the replacement could end up being Mr. Beast. However, guys, I think that is very unlikely. Now, on top of that, guys, even if Elon Musk does leave as the CEO of Twitter, I don't think that's really gonna change much, especially if he continues with his tweeting activity. I don't think him just stepping down from the CEO is gonna make much of a difference. However, maybe that's what the general public perceives, that it is gonna make a difference. I disagree. But I do want to point out something very notable, and that is the fact that in a Twitter space, Elon Musk mentioned that he plans on not selling any more shares of Tesla, at least for a while. However, I don't think this is something that you could 100% take his word for, because at any moment something could happen and, you know, really force him to sell his shares of Tesla, and he could just say, well, I had to do it because of debt for Twitter and etc. Right? So I really don't think you should, you know, just take his word on that. However, it is something notable. And if we look into the after hours price action for Tesla after Elon Musk made that announcement in the Twitter space, it looks like Tesla did have a little bit of a spike up. However, I want you guys not to get too excited, because in the after hours there is less trading activity, and with less volume it's very easy for a stock to spike up and spike down. So I really don't take the after hours too serious, as there's definitely always going to be more volatility in the after hours. But of course, nonetheless, this is a positive statement. We'll just have to see if Elon really does hold up his end of the bargain. Now guys, don't get me wrong, I don't think that Elon Musk being on Twitter is so much a problem, especially if he starts making more positive tweets, specifically on promoting Tesla and the agenda of Tesla and what they're doing. I think if he continues doing that, then overall that's going to be a good look. I just don't think it's good when he gets involved in politics and anything else like that, because it's definitely kind of disheveling the perception for Elon, and I think it's best to not really share your opinions online. Just my opinion, right? But I guess technically I'm sharing my opinion. However, as I mentioned in the beginning of this video, there is an analyst that believes that Tesla stock is going to fall down an additional 80%, and I just want to play a few clips for you guys to just like watch, and then I want to go ahead and break down my thoughts on this.
The valuations, of course, are obviously an issue, and they have been for a while for many Tesla bears out there. Now, earlier last year, this was a stock that was valued at almost 230 times forward or anticipated earnings. It has come all the way down to about 24 to 25 times forward earnings, which, by the way, doesn't make it that much more expensive than some parts of the S&P 500. But if you look at companies and legacy automakers, to your point, like Ford and GM, which are trading at, call it 5 to 7 times forward earnings,
there you go.
It looks a lot. But some would say that Tesla's growth story is worth it. Why are they not right?
It's not growing. And one more thing on valuation, right? Typically in a luxury market, once you reach roughly 15% of that market, your growth stops. Look at BMW. They sell about 2.5 million cars a year. Look at Mercedes. They sell about 2.3. BMW valued at 58 billion, Mercedes valued at 70 billion. Both of those companies have great margins, better margins than Tesla. So if you apply those valuations of Tesla, you're talking about an $18 to $22 stock versus $140 today, roughly.
Now here's the thing, guys. This analyst has been bearish on Tesla for quite a while, and for the past couple of years, Tesla has risen up substantially. So he's probably been wrong a substantial amount of times, and based on Tips ranking, he doesn't have a really good ranking. However, guys, I do somewhat agree with some of the things that he's fundamentally saying about Tesla as a company. But guys, here's my take on fundamental analysis. I definitely look at fundamental analysis. I look at technical analysis. I look at other data points. But I definitely recommend that you guys read a book called A Random Walk on Wall Street. This book really breaks down that, you could do as much fundamental analysis that you want, a bunch of technical analysis, but at the end of the day, what really moves the price action of a stock is the buying and selling pressure, okay? And more specifically, the buying and selling pressure of institutions, being that according to FINRA, trading from institution accounts for 70% of the volume on the market. So basically what I'm saying is, even if the fundamental analysis from this analyst is 100% correct, that does not necessarily mean that Tesla stock has to go down an additional 80%. Because at the end of the day, what really shapes Tesla going up and down are these big institutions. And if they see the narrative that Tesla is a company that's going to continue going up, then at the end of the day, the fundamentals can be 100% pointing towards a downward trend and the stock can go up. Because at the end of the day, it's about the big money that is moving the stock. And currently right now, over 44% of the stocks held from Tesla are from institutional investors. And so if they just decide that Tesla is possibly going to continue going up, then they could simply just keep buying more and raise the stock up. So that's why I don't 100% agree with that analyst. And guys, this is why I talk about looking into several different data points in the Push and Profit program. I talk about this almost all the time. Now, speaking on data points, I want to point out the fact that 90% of people who watch my channel or watch my videos are not subscribed to the channel. So if you find value in any of my videos, maybe consider tapping that subscribe button.
Do it! Just do it!
Okay, so now I want to break down what exactly I am doing going forward, right? So for my long-term investing portfolio account, I'm actually reducing my risk or my exposure in the stock market and actually gaining more exposure to treasuries, as the risk to reward in the stock market is actually looking less attractive than, something like bonds. However, for my trading account, right, because of course trading and investing are two separate things, for my trading account, I still remain very bearish and I still think there's a lot more opportunity to exploit, the downtrend going forward. I think we're moving less from an inflation problem to more of an earnings problem, as I stated in my last video. And so, I'm still shorting Tesla. I'm still shorting other stocks as well. However, there's times where I'm bullish. As I mentioned in a multitude of different videos, during a bear market, stocks don't just go down. Actually, there's less volume. So because of that, there's more volatility, which is why we have a lot of spikes and rallies. And, being that so many people are bearish at the moment, sometimes when things are really down and the little rally comes up, you can make a lot of money with a short squeeze, right? Or, just buying calls just because the call premium is, very cheap. But again, I don't want to go too deep in that. If you guys want to learn more of what I'm doing for my trading strategy, my long-term investing, definitely check out the Push and Profit program. There is a 60% off coupon code that does expire this Christmas. So definitely take advantage of that if you guys want to know, what it is that I'm looking at for the current market situation. With that being said, guys, let me know what your thoughts are on Tesla in the comment section below. And before you guys go, make sure to watch this next video right over here. I'll see you guys on that next video. Take care.